Hey, what's going on, everybody? I hope all of you are doing well. Welcome back to my channel. If you are a returning viewer, thank you so much for returning back to the channel. If this is your first time, hello, how's it going? My name is Rose. A lot of people know me as Rose. My real name is Jordan, but you can just call me either one. It doesn't even matter. Anyways, today I'm going to be showing you a strategy. It's a strategy that I like to implement into my own trading. I asked my buddy, "Yo, what should I give them? Should I hook y'all up with either a swing trading strategy because I use both or a scalping strategy?" And he was all like, "Bro, scalping." And I was like, "All right, bet. So let's do it." So today I'm going to be showing you a scalping strategy. It's going to be pretty nice. It's really lethal. I like it a lot. If at any point in time you do enjoy this video, you like it, you feel like I delivered you some knowledge, make sure to hit that like button for me, please. I would appreciate it a lot. It definitely helps out the channel a lot. Hit that sub if you're not already subbed. I'm going to be dropping a lot of videos based around trading specifically in the future. You know what I mean? And so if you want to see those videos, make sure you sub and hit that bell so you know when I upload. Anyways, you guys, so getting into it here, I'm on TradingView. If you don't know what TradingView is, it's a platform that many traders use. It just gives you a lot of freedom to use a lot of tools, utilize things, and really analyze the charts. Um, so jumping right into it, the market moves in patterns, and so these patterns are considered market structure. It'll push, it'll pull back, it'll push, it'll pull back, it'll push, it'll pull back, and it'll push. Okay. Now, I'm not getting ahead. I just kind of wanted to draw that out. I'll explain this. Now, whenever this push happens, the market will always push, okay? It'll either push to the upside or to the downside. Whenever it pushes, it lets you know who's in control. As you can see here, it's pushing up. Who's in control? The bulls, right? Because it's a bullish market. It has the uptrending momentum. And eventually that uptrending momentum is going to get tired, okay? And whenever it gets tired, it'll fall a little bit and the bears will take control. It'll become a little bit of a bearish market, but it's still overall an uptrending market, okay? And so this right here, you could sell it, yeah, but you'd be counter trend trading. If you don't know what counter trend trading is, it's very dangerous. I don't recommend it to anybody. I've counter trend traded a lot and it's fucked me like bad a lot. I've lost a lot of money to counter trend trading. I've also made a lot of money doing it, but I won't get into that. I definitely recommend stay away from counter trend trading. Um, right here, whenever it's going down, it's just the bulls are regaining momentum. They're taking a break. They got tired from this whole big push. They're just getting their water in. They're taking a little break, getting their breather up, and then boom, they start pushing again, right? And then they do the same. They get tired, take a little break. It's halftime. Boosh, third quarter. Boom, take a little break, timeout. It's halftime. You know what I mean? Boom. So that's considered an uptrending market. And the way that you would look at it is this right here is a high, right? This is a high. Then this right here is a low, right? Because it made this high point, then made this low point. Then what happened here? A higher high came inbound. Why is that a higher high, you may ask? Well, because this high is higher than this previous high, okay? Then it had its pullback and it made a higher low, okay? Why is this a higher low? Because this low is higher than this previous low, okay? Then it made another break and it made this higher high. Why is this a higher high? Well, because it broke past this previous high right here, right? If we were to draw a little line right here, it pushed up, boom, and it made a new high, made a higher high. And then it pulled back and it made a what? You already know, it made a higher low. And so that's a bullish market. You're going to be looking for this high, low, higher high, higher low, higher high, higher low. Whenever the market's going up, whenever you see it visibly going up, look for those highs and higher lows because you're going to be wanting to look for those. Now, whenever it comes to trading, you're only going to want to enter on the higher lows, okay? You're never going to want to buy in this market specifically. You're going to be looking for buying opportunities. And right here, you're not going to buy at a high point. Why wouldn't you buy at a high point? Well, it's simple. If you bought right here and then it fell, you'd be losing money. Why would you want to buy up there? Instead, wait for this higher low to print on the chart, and as soon as a higher low is shown, boom, you enter, boom, and you catch the new higher high. You know what I mean? You're not going to enter here. You're going to enter down here on the higher lows. Okay, so we're going to see that. We're going to utilize that. Now, that's an uptrending market. A downtrending market, it's the same thing, just vice versa. So in a downtrending market, again, you're going down, right? So the market will push down. The Bears are in control. The Bears are tough right now. They're mean right now, but the Bears are getting tired. So what'll happen? A pullback will happen. The Bears will drink their water. They'll take a little break. They need a little break time right now. Then they come out fierce again. Boom. They keep pushing. Then another pullback happens. They get tired again. Then they keep pushing. Then a pullback happens. They get tired again. You see the little pattern right here? This is market structure. This is an uptrending market and this is a downtrending market. It's very, very simple. Please take notes. That's very simple, easy game for you right there. I'm not even lying to you. And so to also help us know what trend we're in, and trend I mean uptrend or downtrend, we're also going to be using this other tool. It's going to be an indicator called the EMAs. EMAs, you're going to find them under FX. Up there at the top, it's going to be your indicators and strategies button. You're going to click that and you're going to type in EMA, and it's going to pop up moving average exponential. You're going to click this one twice. One, two. Boom. And then you're going to hover over them. They're going to be on your left side. You're going to hover over it and click settings. Under settings, you're going to go under inputs and you're going to change it to 50. Okay. Now you could change it to any color you want, anything you want. Me personally, I like to do it purple. And then the reason why I like to do it purple is because my downtrending candles are purple. This kind of helps me out. You know what I mean? So you're going to hover over the next EMA. You're going to click the settings as well. This one, you're going to change it to 8. Everything else you're gonna leave the same on both. On both of them, you're gonna leave the same, just change the lengths. And then you're gonna go to styles, change it to whatever you want, whatever you want. Personally, I like to use these two colors just because they're the same colors as my candles and it looks clean on my chart. I like it. I like these colors a lot. They're my favorite colors. Anyways, so the 50. We take this one off right now. This is the 50 EMA. The 50 is like the past 50 days. This is how price has moved or whatever. Price meaning candles, you know what I mean, if you don't know that. Right here, as you can see, whenever price is above it, price goes up, meaning above the 50. Whenever price goes below the 50, price goes down. Excuse me. As you can see here, price was over the 50 and it's been going up. Eventually, whenever it gets a little far from the 50, it'll have its pullback and it'll pull back towards the 50. Sometimes it'll respect it, meaning it'll test it, it'll just wick it, and then it'll respect it, meaning it'll go back the other way and show rejection towards the side bias of our favor. If it's above it, we're looking for buys. Above the 50, we're looking for buys. If price is below the 50, we're looking for sells. Okay. And so that's that one. So above it, we're buying, below it, we're selling. Now, if we use the 8 with that, the 8 is the same way. Just above it, if we're above the 8, we're buying. Below the 8, we're selling. As you can see, price tucked below the 8, this little turquoise one, and it just started selling. As soon as price closed over the 8, it started going up. Closed below, closed above. Now it's below it, so it's possible that price is going to go down. But whenever price closes below it, we don't want to sell it right away. We got to check the 50. If we're above the 50, we're not going to sell it because it's considered an uptrend. Remember, that's a counter trend trade, and we don't counter trend trade here. Okay, we want to trade with the overall trend. Why? Because trend is your friend. And so, what we want to see is we want to see price pull back, and we want to see it continue up. So if we look right here on AUD USD, it just had this big push, right? And after a push, what happens? They get tired and price pulls back. And what are we seeing right now? Price is coming down. And so it's possible that it's pulling back. Okay. Now it won't pull back all the way to the 50, not all the time. Okay. Now this is another thing that I like to use with this strategy. Heikin-Ashi candlesticks. If you don't know what Heikin-Ashi candlesticks are, you could go right up here. You'll see right next to your time frames. By the way, this is on the 1 hour time frame, okay? I'm sorry I didn't explain that from the beginning. I'm still kind of just going over EMAs right now. But this strategy will be on the 1 hour time frame. You will not do it on any other time frame, strictly 1 hour, okay? And so right here, we'll go to you'll see up here your time frames. If you look right next to it, you'll see these, and then you'll see a little drop down menu. If you click it, you'll see Heikin-Ashi. I already have it starred. Click it. Heikin-Ashi really takes out a lot of the noise for you, okay? If you're on default trading view, if you haven't edited your settings, customize them to your favor, then your candles will be blue and red. The blue ones are up and the red ones are down, okay? And so this is the way the strategy works, okay? It's so simple. It's so simple. Again, with the 50 move exponential moving average, whenever we're above it, we're looking for buys. And whenever we're below it, we're looking for sells. Okay? Now, whenever price gets far away from it, like right here, price will eventually come back towards the 50. Okay? And this is called a what? A pullback. Okay? And we only enter on the pullbacks, okay? We do not enter at the top of pushes, we do not enter like in pushes. We enter as soon as the pullback ends, okay? Once the pullback is finished and the next push begins, that's whenever we get in, right at the beginning, okay? So, if you notice here, we're in a bullish market, right? Price just pulled away. And as you can see, it's pulling back. With the Heikin-Ashi, it's telling me that the purple candles are going to be your red candles if you're on a default trading view, okay? And remember, they're going down. That means it's bearish. It's going down, okay? With this candle, it's telling me that price is pulling back towards the 50. And so what I want to see is price pull back towards the 50, and I want to see it show me a little turquoise candle and start moving back up, and I want to see it close above the 8 like this one did right here. If we would have had this opportunity right here, this was a beautiful opportunity because as you see, price was above the 50 and it went a little distance from it. Then it pulled back towards the 50, and then as soon as this turquoise candle came in, letting me know that the bulls are now back in control, the bears are no longer in control, and as soon as it closed above the 8, remember, above the 8, we're buying. Below the 8, we're selling. And so now that price is above both the 50 and the 8, and Heikin-Ashi is showing me a turquoise candle, I'm going to take that buy position. And I'm going to take that buy position right here. I'm going to put my stop loss right below my moving averages. Okay, both of them. Because if for whatever reason price wants to go down and close below my moving averages, I don't want to be in that trade because remember, if we're above both of them, we're buying. Below them, we're selling. And so if it goes below them, then now selling opportunities are at hand. And I'm not going to be in a buy if there's sellers in the market. You know what I mean? And so that's where we're at. Now, this is just going to be a trader tip for all of y'all. Whenever it comes to stop losses, I don't like to put them in my trading terminal I use MetaTrader for. I don't like to put them in because sometimes news will come out, sometimes some bullshit will happen, and a candle will just wick your stop loss and it'll continue in your direction, and it'll suck because you'll lose that position, but you'll actually have won that position if you didn't lose that position by a stupid ass wick. And so I like to make a mental note of like where I'll exit if price for whatever reason closed below that spot or at that spot. You know what I mean by that? I hope you guys understand that. And so yeah, you guys, as you can see, price ended up hitting like 50 pips. Excuse me, I got the hiccups, I swear. Risk a 1 to 2 risk to reward ratio right here. We got a 1 to 2. We risked 25 pips to gain 50 pips, and that was the dub. As you can see now, it's pulling back. We can see that it's in an uptrending structure, and we could possibly see more buys coming in. And so that's that. Let's just go back into the markets, and then let's just look at some examples, okay? It's a random spot. Okay, we can't go that far, I guess. All right, we're right here. Okay. So, as you can see here, as soon as price goes over the 50, remember you're looking for buys now. It pulls back a tad, okay? Whenever a purple or a red Heikin-Ashi candle comes up, whenever 2 or 3 pop up, that's considered a slight pullback, okay? So right here, it had a slight pullback and it closed below the 8. And then, boom, this big green one came in and it closed back above the 8. So here's our confirmations. We're above the 50, so we're looking for buys. We just got another green Heikin-Ashi candlestick, or blue in your case if you are on default. We got another blue Heikin-Ashi candlestick telling us that the buyers are back in control. Just took the momentum away from these red, purple in my chart, but red on yours. Purple bearish guys. It just took the momentum away, and we just closed above our 50. So what is this telling us? Buy. And what are we going to do right here? We're going to buy this position. Our stops right below both of our moving averages at 42 pips. Yeah, that's a little bit of a big one. Now, if you wanted to be like a very non-risky trader, you can put your stop loss right below the candles. It could wick it, but remember, make that mental note. Only exit if a candle closes below this candle. If a candle just wicks it, you're good. Just stay in. But if a candle closes below it, then, you know what I mean? Then we're going to exit. And for right here, for example, let's just say that if we did put our stops like right below this new candle, right? The candle that's in our favor and it's our entry candle, right? Let's just say we put our stops right below there. We're only risking 26 pips as compared to like 40 pips, right? And then that'll give us a better risk to reward ratio. You know what I mean? It'll give us a better risk to reward ratio. But for this sake, let's just put it right below the moving average. We're risking 40 pips, and then let's just aim for a 1-to-1 right here, meaning we're risking 40 to gain 40. Okay, and as you can see, we won this position right here, but not only that, it went up for a lot more. It actually hit around 65 to 70 pips. That's another win right there that we got. Pretty cherry. And so now we're going to wait for the little pullbacks, right? Little pullback happened right here. Gave you a little green candle right here. It's above the 50. Pullback happened. How do you know the pullback happened? Because it came back. It pulled back and it had more than 2 to 3 Heikin-Ashi candlesticks that were of the other color. And so after that, it closed above the 8. Okay, above the 50, above the 8, change of momentum. We're entering this market for a buy. Boom. Now for this one, if you put the stops way down here, it would be a really, really bad trade. And so this one, you could put the stops like right below all these candle wicks right here. So for whatever reason, if price were to break this pullback, because remember we're in an uptrending market, pullbacks happen and make a what? A higher low. So if whatever reason price broke this higher low and it made a new low, a lower low, then that would be a possible change of structure. It would possibly be changing to a downtrend, right? And so right here, as you can see, we entered it, it came up into a little bit of profit, and then it fell a little bit, and then it ended up pushing into profit. If we were to be risking like a 1-to-1 right here, we ended up winning that position if it was a 1-to-1 risk to reward. Okay, so that's another win right there if we were to just do that. Now, I always recommend either shooting for a 1-to-1 or a 1-to-2 risk to reward. Um, you can always hold the trade until a candle closes back over the 8 moving average. Okay, as soon as a candle of the opposite color closes below or closes back above your 8, just take your profits and exit the position. That's one way to exit. Um, and then another thing too is as soon as if let's just say that you're shooting for like a 1-to-2 risk to reward ratio, right? As soon as it hits a 1-to-1, you can move your stops to break even, meaning you'll put your stop loss a little bit above your entries so that way there's no longer any risk on the table. So if for whatever reason price wants to shoot back down towards your entry, you'll be taken out with profit. Okay, so you won't lose that position. And that's not a mental note one. That's an actual put into your terminal one. So that way if price does smack your stop loss, you'll be stopped out in a little bit of profit and it won't be a loss on your trading journal or anything. And so we can consider this a dub. I personally would. I would only recommend doing a 1-to-2 risk to reward if it has a really big pullback towards the 50 like I was talking about earlier. If it just has one of these smaller pullbacks right here, only go for a 1-to-1. Okay, note that, write that down. I want y'all to write that down. Okay, and so right here, as you can see, boom, this big change came. Boom, it came, and here's a little pullback. Here's one candle of the opposite color, but then it changed. Now here's one candle again. One, two, three. This is considered our pullback. Boom, this purple candle just came in, change of a momentum. It closed below our 8 and we're below our 50. We're going to take this sell. Now, again, we could put our stops above the 50 or right below the candle. For this one, we'll put it right below the candle. We'll be risking like 11 to 10, 10 to 11 pips. We'll do it 12. That's fine. 12 pips is fine. And again, it didn't pull back all the way to the 50. So this one, we're just going to be risking a 1-to-1. And as you can see here, we won that. We risked 12 pips to win 12 pips. Not only that, you could have held it and you could have won like 35 plus more pips. And so with this is another tip that you could use too. As soon as it hits your 1-to-1, this is what you could do with like 1-to-1 setups. As soon as it hits your 1-to-1 and you're like, okay, perfect, I won this trade. Instead of taking all your profits, just take like 50%. If you take 50%, and then you leave the other 50% running and then throw your stop losses to break even, you take pretty much almost all risk off the table. You paid yourself and you're leaving a little bit on the table to run for a little bit more profit. Now, it's not being greedy, it's just letting your position play out, letting the markets do what the markets do and allowing the market to give you what the market wants to give you. You know what I mean? And so that's one way you could do it too. I hope I didn't confuse y'all. Again, as soon as it hits your 1-to-1, you could claim 50% of your profit. So if you have like a 0.02 lot size, as soon as it hits your 1-to-1, claim a 0.01 of that 0.02, okay? And then you're going to leave 0.01 running. Once you leave that 0.01 running, throw those stops to break even. So if for whatever reason price wants to go back to your entry, you don't lose it. You know what I mean? But if price wants to continue in the direction of your favor, you win more. You know what I mean? It gives yourself the opportunity to really milk these fucking markets, huh? Just kidding. But anyways, right here, boom, it had this big push. We want to see the pullback and we want to see it, but it didn't happen. Boom. Then it came down. We want to see a pullback. It didn't happen. Boom. We want to see a pullback. This right here is considered a little range. If it starts doing this with the 50, it's not giving you a clear direction. It just starts doing that. That's a range, and you want to wait for clear direction, okay? Boom. It came down. One, two, green, one, two. See, this is a little small pullback that happened, right? One, two, purple, one. I would consider this a little small pullback, but it didn't close over the 8. I mean, it's been in sells. One cool thing about this strategy too, now I don't want to tell you get like reckless or anything. Not at all. I don't want to tell y'all to get reckless at all. But let's just say that price closes below the 50, right? Now, whenever price closes above the 50, it's a possible change of direction. If it closes above it, then it's going up. If it closes below it, then it's going down, right? Whenever it closes below it, you could enter that sell and you could hold it until price closes back over your 8, right? If we were to do that, we would enter right here on this purple candle and we would have held until this one and we would have made 32 pips on that move, right? Let's just say right here. See, this one would have been a little more riskier. This is why it's a little risky, and this is why I say I don't want you to get reckless. This 50, it closed over the 50 right here. You enter this, and then you exit as soon as it closes back under. Now you lost 6 pips, which 6 pips isn't much. No, it's not a big loss, but it's a little more of a reckless trading style, you know what I mean? But you could really do that with this strategy, honestly, you guys. But anyways, let's just get back to it. Where were we? We were right here. So it broke above, right? We want to see a little 2 to 3 Heikin-Ashi candle pullback. Boom, right here. Perfect. Went below the 8 right here, and then boom, this other one comes back in, tells us that the momentum is back bullish. So we're gonna enter. Our stop loss won't be that steep. We're gonna put it right below these wicks, right below these candles. It's gonna be a 32 pip stop loss, and we'll aim for a 1-to-1. And why are we aiming for a 1-to-1? Because it didn't pull back hard to the 50. Okay, it just pulled back tiny. It's a tiny little pullback. You know what I mean? We won that 1-to-1, and we won it right here on this candle right here. Boom. And then as soon as we made our profits, price flipped. Boom. And so right here is a great example. Let's just say on this 1-to-1, you claimed 50% of your lot size and you left 50% running and you threw your stops to break even and you wanted to see it push for more. Instead, it fucking fell straight towards your stop loss and it stopped you out, but it stopped you out in a little bit of profit. So you didn't really lose. You won. Still a good day. Good shit. I'm telling you. So if you can start implementing that, that's really good position management in my opinion. I think that's really good position management. It limits your losses, and I mean honestly, all around it's really, really honestly in my opinion phenomenal trading. Anyway, if we were to go back into it, here's a little pullback towards the 50. Now here's a little steeper one. Right here, boom. Here's a little steeper one. Right here, 2 to 3 candles of the opposite one. Then boom, close back over the 8. We closed over the 8. We're over the 50. Momentum is showing us the side of our favor. We're going to enter this position and we're going to go long. Where are our stops going to be? If they were down here, it'd be a little steep. But it did have a big pullback. If we aimed for a 1 to 2, we'd be really pushing it. So for this one, we'll put our stops right below the wicks. We'll have like a 23 pip stop loss. Boom. And because it pulled back to the 50 really, really nicely, we'll be aiming for a 1 to 2 risk to reward on this one. And it did come into a little bit of drawdown. As you can see, if we were to do this, it came into about 20 pips drawdown, but then it ended up smashing our target 1 to 2. Beautiful. You know what I mean? Beautiful, beautiful. Now, with that, you could claim all of your profits, or again, you could claim 50%, move your stops to break even, and let the other 50% run. But I mean, if you hit a 1 to 2, don't get greedy. These setups will come often, especially if you're watching like more than one pair. I like to watch more than one pair personally, just because those setups end up happening a lot more often, and it allows me to take advantage of a lot more setups. You know what I mean? And so right here, it ducks below the 8 with a purple one. Are we gonna sell this? Fuck no. Why aren't we gonna sell this? Because we're above the 50. Overall, the trend is up still, right? So what we're gonna wait for is for price to pull back towards the 50, because this is considered a pullback. And then we want to see it push back up in our favor, okay? So right here, it pulled back and it respected the 50. This is the respect that I was talking about earlier. It respected our 50 right here, and it showed rejection back towards the upside, and it closed above the 8. So if we were to put our entry right there, oops, and our stop loss right below the moving averages, put 18 pip, 20 pip. We could just put a 20 pip, whatever. And then we aimed for a 1 to 1. Boom, it smacked our 1 to 1. But this one, it would be like a 1 to 2, right? Because it pulled all the way back to the 50. We would be aiming for a 1 to 2, you know what I mean? As soon as it hits a 1 to 1, I think I said it earlier, just move your stops to break even. So that way, if it does pull back and it smacks you out, you don't take a loss. You know what I mean? Move your stops to break even as soon as you hit a 1 to 1 regardless, or claim your profits if you're just shooting for a 1 to 1. Okay? That's a rule. Move your stops to break even. Stops to break even 1 to 1. Stops to break even 1 to 1. Okay? It's going to save you. I promise you. It's going to save you. I promise. I promise you. Anyways, right here, boom. Price ends up ducking below. Again, you could have sold as soon as it closed below the 50. Stops right above both of them, both the moving averages, and you would have had all this profit. Exited as soon as a candle closed above, which would be this one right here. You would have banked 22 pips. Not bad. But we're looking for the pullbacks. And here's a pullback. It pulled back to the 50 very, very nicely right here. And so right here, we'd be shooting for a 1 to 2, right? But we got to wait, excuse me, for that purple candle to close up below the 8. As you can see, it did that right here. Boom. Right here, we're going to put our stop loss right above both the moving averages. This would be a 12 pip stop loss. And we're shooting for a 1 to 2. So we're going to shoot for 24 pips, right? 12 pips would be right here. This is our 1 to 1. So as soon as price got to that red line, we moved our stops to break even. You see that? Even though we're shooting for a 1 to 2, which was 24 pips, it hit 12 pips, and we moved our stops to break even. So no risk is no longer on the table. If price for whatever reason wants to flip back, which it did, it's going to stop us out in a tad bit of profit, and we're not going to take a loss. And it did that. So didn't take a loss here. I mean, we took a loss, but we got stopped out at break even. Okay? So boom, price flipped up. Price flipped up, and it's over both of them, right? Now here's 1 to 2 Heikin-Ashi candlesticks. 1 to 2 right here. Boom. 1, 2. Here's a pullback. It's respecting the 50. Here's this candle that flips momentum, closes above the 8. We're above the 50. What are we going to do? We're going to take this buy. We're going to buy right here. Where are we going to put our stop loss? Oops. We're gonna put it right below the moving averages. Boom. We have a pretty tight one right there. We could put it 5 pips. We'll put it a little more at 8 pips. Okay, 8 pips stop loss right below this little wick right here of this other candle, and we're aiming for a 1 to 2 on this one. We'll aim for a 1 to 2. Boom. And as soon as it hit 4 pips, we moved our stops to break even. It hit our 1 to 2, as you can see. It hit for way fucking more. As soon as it hit your 1 to 2, claim 50%, stops to break even, let the other 50% run, and it would have gained all of this for you. You would have gained 100 plus pips on this position right here alone. Then here's a 2 to 3 candle pullback. Boom, pulling back. Here's this candle that closed above. Could enter on it. Boom. Now we're a little far from this moving average, so we could put our stops right below the candle. Because if for whatever reason price wants to continue to close back down below it, then we want to be out of that position, and we want to look for a better entry at a better price. You know what I mean? Because if it's pulling back, like let's just say you enter at a certain spot and then it keeps ducking down, you would want to get out of that spot and get in at the better spot at the bottom, right? You'd rather buy that currency for a cheaper price, right? And so that's right here. Um, as you can see, yeah, it came down a little bit and it didn't close below the stop loss. If we were to put it right up there, yeah, we can consider that a loss. We'll just say that this is a loss. This is like the first loss of this strategy. So we took a loss of 4 pips, right? And so we're still in this little downtrend. I'll just delete this because it keeps popping up. But we took a loss right here, okay? Not every strategy is going to be 100%, you guys. Let me just clear that. Every professional trader loses as well. Everybody loses, okay? You got to manage your risk in order to stay consistent and proficient in these markets, you guys. You have to make sure that you're managing your risk. Okay. If you don't know about risk management, let me know. I'll make a video about it in the future, and I'll teach you guys how to implement risk management and make sure that you're consistent and you definitely have your shit on. Okay. Right here. Boom. So again, we lost this position. It's still ducking back. This candle changed momentum, but it didn't necessarily close above the 8. Boom, this candle did. So what we're going to do is above the 50, close above the 8, color change. There's your 3 confirmations right there. We're going to enter this long. Boom. We're too far from the 50, so we're going to put it right below the candle. This is going to be a 9 pip. And we're aiming for a 1 to 1. Why are we aiming for a 1 to 1? Because it's not a steep pullback to the 50. It's only a small one. And as you can see, it ended up smashing that 1 to 1. And then as soon as it did, claim 50%, move stops to break even, and allow it to run for this extra little like 20 pips that it gained you. Okay, perfect. Another win right there. Then it started pulling back, but it didn't hold. It ended up breaching and breaking below the 50. So now we want to see a pullback to the 50 to go for sales, but it ended up breaking above. Breaking, here's another little range. Boom, showed us clear direction. Now it's pulling back towards the 50. A nice pullback this time. Boom, this green candle closed above the 8. We're above the 50. Change of momentum because we're in a green candle. We're going to enter this long. Stops below the 50 because we're pretty close to it. It'll be a 15 pip stop loss right here. And since it's a pretty steep pullback, we're shooting for a 1 to 2 on this one. Boom. So we ended up making this right here with this candle. Boom. 1 to 2. As soon as it hit your 1 to 2 stops to break even, you could have claimed 50%, or you could claim your whole position. It's totally up to you guys. You know what I mean? And then boom, here's another little pullback. Boom, here's another close over. You enter this long, stops below the 50, 14 pip stop. We're aiming for a 1 to 2 because it's a pretty steep pullback. Boom, fucking hit. As soon as it's hit, stops to break even, claim partials, and let this run. You allow this to run. Oh my gosh. You allow this to run, you would have smacked up for 300 plus pips. 300 plus pips, you guys. I'll leave that right there, you guys. In practice this strategy, you could really, I'm sorry I didn't go through like many different pairs, but it works on every pair. I'm not even joking. US 30, gold, Bitcoin, even, all those are included. It works. Like, I'm not even lying to you guys. Excuse me. Again, when price is above the 50, you're looking for buys. When price is below the 50, you're looking for sells. Whenever price is above the 50 and the 8, you're buying until price closes back below the 8. Whenever price is below the 50 and the 8, you're selling until price close back above the 8, okay? Use Heikin candlesticks to allow you to know when the momentum is changing to the other side. You know what I mean? They're like momentum candlesticks in a way. And so I'm gonna leave it at that, you guys. Drop down in the comments. Tell me how you guys are liking the strategy, if you guys are using it. Again, demo trade it. I am not a financial advisor. This is not advice to take. I mean, this is for your own entertainment. But if you do want to take this advice and you do want to implement it, use it on a demo account first until you get comfortable with it, until you feel like, damn, I'm fucking killing it. Because I have a buddy who's fucking killing it. As soon as you start killing it, then you can go into a live account and you just could just start smacking down. You know what I mean? But this is a really great strategy, you guys. I really like it. I use it myself. My buddy uses it, and I want you guys to use it. Okay. Again, this is some great information for you guys. I dropped a little bit of good tips as well. Make sure you add it to your liked videos so that way you could go back, you could find it, you could watch it again, and make sure you comment down below. Like I said, follow me on my Instagram. Make sure if you aren't subscribed, make sure you subscribe. I'm talking really fast, huh? I get really excited for these videos because I just want you guys to see this knowledge and add it to your own fucking arsenal and fucking just go off in these markets. That shit would be sick. But anyways, you guys, um, yeah, like I said, 850. Look for those pullbacks, you guys. Market structure. Look for the pullbacks. Okay, wait for the pullbacks. 2 to 3 Heikin candlesticks of the opposite color. Okay, you guys, and just look. I mean, go back in time, just like I did on the 1 hour time frame. 1 hour time frame. Go back in time and just look. You know what I mean? And I'm sorry if this was a long video. Thank you guys so much for those of you who watched to the end. I really fucking appreciate it. I really do. But until next time, you guys, thank you guys so much for watching. We'll see you guys in the next video, all right? Later.